Hello my colleagues, welcome back to another video. If it's your first time here as well, yeah, absolutely welcome. Everybody wants to make quick money from stocks, but let's be honest, most people end up losing money instead. Why? Because they chase hype, buy the wrong stocks, or don't have a strategy. But today I'm going to show you how to build wealth from stocks the right way, faster than traditional investing, without falling for get rich quick scams. Before we jump into the video, if you're anyone interested in business and finance content, do me a favor or do yourself a favor instead by smashing that like button and subscribing to the YouTube channel. Also, I encourage you to share this video with someone special once you are done watching it, as you most likely be doing them a favor. Oh yeah, my colleagues, no long talk, let's jump right into the video. Let's go. So guys, before we start talking about buying and selling stocks, let's get something straight. Quickly doesn't mean overnight riches. This is not MMM or some shady Ponzi scheme. Stocks are powerful, yes, but if you're expecting to double your money in 1 week, I beg, you need to calm down. That's gambling and not investing. Now let's talk about mindset, because this is the most important thing and many people get it wrong. The first thing to know is that patience is key. When I say quickly build wealth, I don't mean sharply or instantly. I mean faster than traditional savings or other slow growing investments. Some people hear stocks and think, I'll put my money today and cash out big next week. But the truth is that's not how it works. Realistically, building wealth with stocks takes years, but it's way faster than just keeping your money in a bank where inflation will chop it like suya. Even if you're doing active trading, you still need a strategy and patience. Now let's talk about risk tolerance, aka how much hit you can handle. You need to ask yourself, if your stock drops by 20% today, will you faint or panic sell? Can you hold through a market dip, or will you run out screaming that Nigerian stocks are scam? Some people can handle big risk, others, small pressure, they are already crying. You need to know yourself. If you are the type that can't sleep when prices are down, then maybe don't chase risky stocks. Start slow and build confidence. Thirdly, we have diversification. You see, one mistake many Nigerians make is putting all their money in one stock or one industry. If that company crashes, your whole portfolio will definitely be affected. A better strategy is to spread your investment, buy different stocks from different industries, tech, banking, oil, and the rest of them. You also need to consider a mix of stable companies and growth stocks. Think of it like a pot of soup. If you cook with only pepper and you don't add any other ingredients again, your body will tell you. But if you mix pepper, meat, seasoning, and vegetables, now we are talking about a proper sweet soup. That's how diversification protects you and makes you enjoy the fruits of your labor. Now that you understand the right mindset, let's move to how to actually pick good stocks and make money the right way. You see, investing without research is like giving somebody your life savings and saying, do as you like. That's how people actually enter one chance. Before you invest in any stock, you need to ask yourself, is this company actually making money, or is it just vibes and PR? This is where fundamental analysis comes in. It's simply checking the financial health of a company before you put your money inside. You are looking at the revenue. Revenue is the company's total money from sales. Think of it as the salary of the business. If revenue is growing, that is a very, very good sign. Then we have earnings or net profit. It's revenue minus all expenses. This is the company's take home after all the bills have been paid. If a company's revenue is high but earnings are low or negative, madam, you need to be very, very careful. We also have profit margins, which is how much of the revenue turns into profit. A company like Dangote Cement has high profit margins because cement demand is strong and their production costs and operating costs are, even though high, not like very, very high to affect their earnings. So while if you look at the airlines, they struggle because their expenses, fuel maintenance and other stuff are very, very high and plenty. So their profit margin is low. Another thing to look out for is debt to equity ratio. This is how much debt the company is carrying compared to its assets. If a company owes too much, it's very risky. You don't want to invest in a company that is drowning in loans. Finally, we have cash flow. This is how money moves in and out of a business or a company. A business can report profits but still be struggling because there are no actual cash flow in the business. You need to always check if they have steady cash coming into the business. Now you may be wondering, where do I see all these numbers? The first place is, if you're looking at US stocks, you need to take a look at the SEC filings. In the US, companies release financial reports called 10K, which is their annual report. They also release 10Q, which is their quarterly report on the SEC website. Secondly, public Nigerian companies release their reports on the Nigerian Exchange NGX website. Also, it's worth knowing that every big company has an investor relations page where they drop their financial statement, and you can simply find this by going to Google and typing the name of the company and adding investor relation to the company's name, and you should be able to get access to these financial details. Finally, you can get these details on financial news websites like Yahoo Finance, Bloomberg, even Nairametrics. These are good places to check. You can also find on ProShare. ProShare is a very, very good place. And another website called All African Financials. These are places you can find financial statements of various publicly traded companies in Nigeria and Africa as a whole. Optionally, if you want to get much more technical, you might want to consider technical analysis. Technical analysis involves looking at a stock chart to decide when to buy or sell. When it comes to technical analysis, you don't need to stress yourself or overcomplicate things, especially if you're a beginner. You can focus on learning moving averages. This helps you to see if a stock price is trending up or down, and then also try to understand ROSI, which is the relative strength index. This tells you if a stock is overbought, which is too expensive, or oversold, cheap. But technical analysis is just one tool. It won't turn you into a billionaire overnight. Even pro traders oftentimes get it wrong when it comes to technical analysis. At the end of the day, fundamental analysis is king. If the company is solid fundamentally, your investment will grow over time. You just have to be patient. So now you understand how to analyze companies, but how do you know which one are actually worth buying? This is where value investing comes in. So what is value investing? Value investing is buying good companies when they are cheap. You are looking for solid businesses that the market is sleeping on, either because of temporary bad news or because people don't recognize their true worth yet. Think of it like buying a land in an underdeveloped area. Today, it looks like a bush, but in a few years' time, when roads and estates and other stuff start coming in, the price of that land will skyrocket in price. That's the goal, or that's the purpose of value investing, or you can say value stocks. How do you spot undervalued stocks? Here are some things you should look out for. One is strong fundamentals. A company should have solid revenue, steady profit, and low debt. If the company or business is struggling financially, it is not undervalued. It's just a bad business, and you want to take a deeper look to really understand what is going wrong and know if it's worth pursuing or not. Secondly is competitive advantage. Does the company have something special that gives it an edge? For example, GT Bank has strong brand and digital banking push. It gives it an edge over smaller banks in Nigeria. Then we have growth potential. The company should have room to expand. Companies in rising industries like renewable energy or fintech often have future upside than some other companies that are in a stagnant industry. Finally is out of favor stocks. Sometimes good companies get punished for short-term problems. If a solid company's stock price drops due to temporary fear, not because the business is falling, it could be a good buying opportunity. Now, let me give you an example. Using MTN, a year ago or 2 years ago, MTN faced some difficulties, especially when it comes to currency devaluation, and inflation was really affecting them, coupled with some issues they faced with regulators. This really affected their stock price. Many investors ran away, but those who understood the company's fundamentals like strong customer base, reliable revenue from data and calls, many of them went on to buy MTN when the stock was dipping. Today, MTN has bounced back and is one of the top performing stocks on the NGX. By the way, this is not financial advice. This is just an example. instead of guessing, you can use stock screeners to filter out for undervalued companies based on metrics like their PE ratio, which is price to earning ratio, high return on equity, and strong earning growth. This is especially for US stocks. You can use Yahoo Finance, FinViz, and Simply Wall Street. They are useful for this kind of thing. For Nigerian stocks, you want to check the NGX website, Nairametrics, read their financial reports, and check ProShare. I really do love ProShare. It's a very solid website. The bottom line is for you to look for solid businesses trading at a discount, and if you buy wisely, you position yourself for serious gains over time. And that's it. Now you have a solid foundation to start investing the right way. But listen, investing is a journey. The more you learn, the better your decisions will be. So if you found this video helpful, smash the like button, share this video, and don't forget to subscribe as well. And also join my investing community. Link is going to be in the description and comment section. It's where we discuss market trends, stock picks, and I share my opinions around the stock market and investing in general. See you on the next one. Deal.